Nottig and I keep saying we got to get Batnick on board, and then we'll do Blue Man Group.
Well, good luck.
Me, you, and Nottig?
Yeah.
I'm in.
And Tobias. All right.
Tobias, he has hair.
All right. So
He missed the joke.
I got the joke. Wait. So we're gonna start where we should, which is global ETF assets hitting $9 trillion. Leanna, do these numbers even surprise you anymore? Given like how closely you watch the industry, they don't surprise me.
I mean, obviously, Tom is more the expert in the ETF space than I am, but I'm not surprised. I mean, especially in the last couple of years with the retail flows and Robinhood, and it's not all meme traders. There's a lot of millennials and Gen Zs that are just investing for the long term, and that's obviously what I advise by in my book and on Instagram and stuff. So
They don't get a lot of
Do you have
attention.
ETFs yourself?
do I own ETFs?
Yeah.
Of course. I think probably 40% of my portfolio is
Really?
ETFs.
Yeah.
But you're an alts girl at heart.
Yeah, I mean, like business-wise, doing business development and marketing for alts is where I started. But from a consumer and retail investor perspective, I think ETFs are amazing. You can do passive investing, active with the thematic plays, get exposure to some of those things that young investors might have thrown money at as a gamble, but you can go in on an ETF in robotics or cloud or whatever stuff you're interested in, gaming, and get exposure to a whole bunch of different things. So I love ETFs, big fan.
So young investors, obviously, they're doing crypto and NFTs, but do you think when they're not telling their friends, they're really doing ETFs? Too?
Is that what it is now? Like ETFs are supposed to be boring?
We know they
They are
though.
boring. So boring.
They're boring, but we also know, like from Vanguard's flows,
Guys.
as much money went into Robinhood, like an equal amount or more went into ETFs.
So Balchunas tweeted this chart. I think this is from Sarah Fagus at Bloomberg. So this is ETF flows by issuer. And look at Vanguard. This is 2021.
the pink line.
With 4 months to go, it's demolished all records. And this really did surprise me because I was talking with Ben about this. Wouldn't you think that like advisors that were going to leave Merrill, they've probably already done it?
Yeah.
Wouldn't you think the same thing with like active to passive? How are people still leaving active to go passive? How is there still so much money?
Because it's not existing investment money.
Dude,
it's new money.
that has to
Yeah.
be.
You don't think that's like just new money people are earning coming into the market? for the
If
first time?
I had to guess, I would say 30% new money.
Yeah.
I am making that up.
I sent you over the chart that Dave Nottig put together, and you guys might be able to throw that up. Can you? Okay, so Dave's been doing this chart for 10 years, and this is mutual funds versus ETFs. And as far as catching up. Now, obviously, that's a hockey stick, but look at mutual funds.
It's
and
not
how
going anywhere.
It's not going anywhere. And where's most of the money? Defined benefit plans.
401ks.
401ks.
Tom,
that's
is
it.
this trillion on the?
Yep.
Okay, so 15 trillion in mutual funds has been the case.
For forever.
But wait, hold on. Keep in mind, this chart is projecting out to 2030, so you have to rewind a little
Yeah.
bit.
Okay, but let's
But
say
this
since,
is happening. This is going to happen.
Since 17, mutual funds have been steady at 15 trillion. ETFs in that same period of time, it looks like, have gone from 3 trillion to what is that? What is the number we think it's going to go to? Is that
27
27 trillion?
by 2030. And Dave's been on this for like 7 or 10 years, and he's been right. The crazy thing there, when you look at the mutual fund money, that's been growing during times when the market's been really good. Just to be able to keep up, you have to have 20% appreciation in the market.
Which we've had.
If I back out 401k assets, that
That's
mutual
it. It's
fund
gonna
number is not going to
crater.
look great.
No.
But
Right.
this also makes sense in terms of younger people being freelancers and gig workers. Like if you're creating your own portfolio that's not guided in a 401k plan with mutual funds, you're just going to buy ETFs.
Right. If it's an IRA and you're self-directed, like you're
Yeah.
doing your own thing.
That's what people are doing on E-Trade, Robinhood, like people my age and younger.
Do you find younger people are still participating fully in 401k plans?
Up to the match point.
Yeah.
That's what's advisable. Get the free money and then do the rest on your own.
But you tell them to hit on the gas, right?
Well, yeah, again, up to the match point, get the free money and then go do your other investing through ETFs.
So
in
if
your
you
own
have a
portfolio.
4% match, but you could put up to 10% in, you're saying 4%.
Tom, hit the mic.
Yeah, 4 because you're probably going to be paying more in fees in your 401k, of course, right? So it makes more sense mathematically to put the rest of the money, if you want to do 10% of your income into your saving and investing, then do the rest of the 6 on your own somewhere else.
The good thing in 401k plans, you do have a lot of index choices. It's not like they're all actively managed, the fees are lower,
Yeah.
that type of thing.
Look at the
Better than
Contra
they
Fund.
used to be, for sure.
$150 billion in assets. How much of that is in 401ks?
Is that
90%.
Is that one of the top 5 U.S.
Has to
active
be,
equity
has to be,
funds,
has
it has to be, right?
Yeah, it has to be.
75% of every dollar going into Fidelity funds, it goes into 401k plans.
Yeah, that's
New
what
money,
that's
new
what I
money
would
that's
that's what
coming
I
in.
would
Yeah.
assume.
Yeah.
And there's a very good reason why. The technology has not really caught up to what's going on the brokerage side. Like, so that it's harder to say to a 401k platform, my contribution this month is $1,000. Break that up into 8 ETFs. The computer won't automatically do that for you. Like to me, that's what's keeping the 40 Act funds alive. Do I have that right?
You're right. And you think, man, we could put a man on the moon in 1968. Why can't we get ETFs?
We could land a rocket intact. Elon Musk just or who just did that? Yeah. Bezos. We're like launching rockets and landing them, and we can't have a 401k platform break the money up amongst ETFs. Like, I find that fascinating.
Do you think one side might be a little motivated?
Correct. No.
There's one mutual fund that's active in the top 20. It's the American Growth Fund. It's almost $300 billion. That makes sense. That's the biggest one.
That's Ed Jones brokers knocking on doors. Okay.
And that's Capital Group that's finally coming out with their own ETFs in February of next year. So the last holdout.
Well, Dimensional did last year.
Yeah.
What about robos? Do you guys know, Tom, do you know what the split is of money going into ETFs through robo-advisors?
The amount of money in robos?
I think it's a drop in the bucket.
It's small.
But
they're all ETFs.
Yeah.
But even if you include Schwab Intelligent Portfolios, Vanguard, it's not that small.
So, right. If you all in, is it what? 500 billion?
Okay. So here's where it gets tricky. Like, Wealthfront has the Wealthfront 500, and they're buying you individual stocks. Like, they're not necessarily defaulting into a Vanguard ETF.
Well, once they get you in, they're going to start trying to move outside of core ETFs because there's a little bit more money in there for them, right?
Yeah, well, we know that because
like they're the risk parity
fund.
Yeah.
Every time they do that, Jason Zweig gets a new article to write. So we know they're going to do that. Net flows so far this year have nearly eclipsed the $736 billion investors moved into ETFs last year. So if you thought last year was the year of the individual investor coming into the market, this year is already bigger, and it's early September. So did anyone expect this? Like from all the ETF strategists that you talked to?
So the big difference is last year there was more money going into fixed income ETFs than going into equity. And this year it's a fraction of that amount, rightly so. And hopefully we'll talk about that as well. But and it's not all about Cathie Wood. It's not all about thematics. It's about the same old consistent core, Michael. It's the Vanguards of the world that continue to kill it with core positions. And advisors are continuing to add those to their clients. As you talk about breakaway brokers that maybe had commission products, they're coming over and repositioning in ETFs.
It does help, though, that the biggest positions in the most plain vanilla ETFs are the best stocks on earth. Like, it helps that it's Microsoft, Google, Apple. Like, these 5 stocks are like 25% of the S&P. Well, it helps.
That's a big thing. And, you probably know in talking to investors, they're probably buying the S&P, and the S&P's been really tough to beat in the last 10 years, right?
Well, and that's I think the difference between last year and this year is that last year it was all growth, at-home plays, and there was like specific things like the Cathie Wood stuff that was working very well. But this year it's just sort of back to like what you were saying, market fundamentals and long-term investing, what works. And so it's kind of a little bit all over the map.
Yeah. So you talk about diversifying, and you talk about the FANG stocks that now are 25% in the S&P 500. The top 10 stocks in the NASDAQ 100 are 50%. Crazy, right? So we all want to be in those next FANG stocks. So with these thematics and Cathie Wood, it offers up that opportunity, but people aren't moving fast enough to diversify. Because do you think that the FANG stocks are going to be the leaders in the next 10 years?
Are the equal weight funds benefiting from that phenomenon that people are looking for more diversification, but they still want an index approach? Price-wise, they look good.
I'll tell you right now.
I would just say this. If you're looking to diversify away from FANGs, you don't go to equal weight S&P, although it's a great product.
How about this interesting?
So you go to active?
You go to Cathie Wood, or you go to thematics, that disruptive technology space, because they're the new sectors, right?
Some of those will become the new FANGs, but most of them won't.
But you think about these technologies, the fact that EV, robotics, those are huge industries, and they're going to continue to get bigger and bigger and bigger. Buying a technology, S&P 500, I'm sorry, a SPDR technology, XLK, right?
You're not getting those.
You're not
stocks.
getting those. No.
So what's taking a ton of money? First Trust. They're all over the place.
Yeah.
The QQEW, the NASDAQ 100 equal weight, that's the purple bar.
Yeah.
Look at that chart.
Yeah.
Taking in a ton of assets. That's $1.4 billion. The blue bar down there is Crane Shares, the KARS. I'm sure you're familiar with that. The electric vehicle ETF. They have $270 million, and they were basically up from zero.
I put this chart, global equity funds, because this is crazy to me. So I'm just going to read where did this come from? This came from John Street Capital?
John Street Capital wrote this
was this his chart, or we don't know?
It came from Goldman Sachs, but this is from the Everything Bubble. He wrote that for FTX.
All right. So as of early August, global equity funds have seen $605 billion of inflows year to date, or $1.015 trillion annualized, equating to $4 billion a day. Global equity funds had seen $727 billion of cumulative inflows over the last 25 years. So from 1996 to 2020, that's the cumulative. 2021 is going to be 40% higher than the prior 25 years combined. Safe to say this is never going to happen again. It's not going to be repeated next year.
If we get stimulus from the federal government again, it will.
Let's hope
Savings
there's not a need
rates,
for
cash, like that's obviously I would say representative of why there's a lot of money going into the market.
I mean, to me,
People that wouldn't have been involved.
to me,
prior to COVID.
we used to have these conversations like, are the millennials ever going to invest? Remember all the content, like they just hate stocks, or they just don't want to be investors, or they think it's too risky. That disappeared in 1 year, and then has reversed to this extent.
Well, I guess, when you have extra money in your pocket from the government gave you, maybe it's a good idea to start investing then. But obviously just like the interest around, I think that's why the meme stocks and everything that's gone on in the last year is great, because at least it's getting people interested and they're opening accounts, making mistakes, losing a little bit of money, but they're in now.
One of the things that I think kept people out was the lack of a place to experiment and look stupid without other people looking. Like if your only option was like go on Schwab and try to learn all this terminology, it was probably like easier to just be like, I'll deal with it when I'm an adult. Like a 25-year-old saying, I'll deal with it when I grow up. Prior to that, your only option was the way I learned, which is call your dad's broker at Merrill and have him make you feel like an idiot for asking like the most basic questions. That's what I was doing in 1997.
Is that how? That's how you started?
Well, I was studying for my Series 7, and I had like bar mitzvah money, and I had to call Jerry.
And
at Merrill Lynch. Jerry was at my 5th birthday party.
So
I had to call
was
Jerry.
he condescending?
Not on purpose, but it's like almost like by default when a 20-year-old wants to be taken seriously by a 50-year-old. Like it's definitely going to be a condescending
When
situation.
did you take the money away from Jerry and do it yourself?
Oh, I lost it when I took it to zero. Jerry didn't have to worry about it anymore. Neither did I. This was the .com bubble.
Okay.
That's the best money I ever lost, by the way.
Yeah.
I think the two most influential investors for retail over the last 50 years are John Bogle and Dave Portnoy. Like I really do think that people being home with their Robinhood accounts, I think that he was hugely influential in getting people into the market. I really do.
Yeah.
So it's funny you mentioned that. I would
say Ramp Capital and Portnoy. I don't think young people know who Bogle is. We know who he is. I don't think the typical new investor knows.
So you look at the amount in ETFs, and we haven't had any rock stars. In the mutual fund area, we had Bill Miller, Peter Lynch. There were a lot of rock stars.
We have Kathy Wood.
We have Kathy Wood,
That's
right?
I'm going to interview her next early November at Cheryl Penny's conference for Dynasty. If you could give me one question to ask her live in front of an audience of RIAs, what should I ask her?
So the big thing I think is her research and her conviction, because she does have a long-term time frame.
She has guts,
and she just doesn't care. The daily, the weekly, the monthly moves, she just doesn't care. It doesn't. We work with them really closely.
So what's the question? Why are you so gully?
Yeah, I don't understand how.
How are you such a badass?
How is your bear case on Tesla $2 trillion?
I'll ask her that.
Isn't that what it was?
I'll 100%.
I think
that's the part about her that bothers you the most.
Yeah,
is a statement that is like obviously to me, it's hyperbole.
There's zero.
But you're not taking it that way.
No, it's not hyperbole. To me, there's like zero humility, and I think that's what rubs people the wrong way. Is if the base case is 3 trillion and the bull case is 4 trillion, how is the bear case 2 trillion?
Yeah.
For Tesla's valuation.
How could the bear case for
we'll
Tesla
eventually
be the biggest stock in the world?
As we keep calling her on it, we'll eventually be right. I don't know if ever. One other point is deflation. She thinks we're in a deflationary mode, and
Because technology is deflationary.
I think she's
for us.
100% right about that.
Yeah.
Well, I've got her in 4 days at Salt for an interview, so give me a heads
cool.
up if you
Oh, you're
if you
interviewing
can
her.
finalize a couple questions for me, Tom.
Yeah, no,
Hold on.
she's awesome.
You're interviewing her before me.
Yeah.
I didn't even realize that. Don't take that question.
Sorry. She was the priority. I'm
No,
just kidding.
no. I'm
No,
saying
I'm not
you're
kidding.
talking to her before I'm talking to her.
Exactly.
Okay. I'll be at Salt too, by the way.
I know.
You're not sticking around for that?
I'm not.
No.
Oh, it's going to be so good.
Yeah.
The chain smokers are performing Tuesday night. Finance is
I could see
fun.
you. I could see you
Finance is
being. I
fun.
could see you being into chain smokers.
I like chain smoking.
Oh, yeah, you love it.
They got some joints.
It's going to be a little marquee party of all the finance folks.
Yeah, yeah.
Uh,
I
well-
actually saw him a couple months ago at the Fontainebleau in Miami.
So what do? They press play on the laptop and then they
Yeah,
go out back and
dance
smoke
around,
a
a lot
butt.
of bubbles and a lot of lights, and
Right.
people are up and
Incredible musicians.
It is.
It's
gonna be fun.
What did you want to tell us about target date funds? I'm fascinated by target date funds. They're the most successful product that nobody has any respect for.
Right.
But I think you're talking about drift here.
Well, you're so right. There's so much money in target date funds, and when we talked before about people putting money in their 401k, well, I don't know. I'm going to talk to a friend, and then you shoot yourself in the foot. Oh, the easy thing to do is just pick the target date.
Yeah.
Well, the target date is for when you retire, and if you're retiring in 2030, right now, if you looked at that portfolio, it's half in bonds. Do you want to be half in bonds? And guess what? There's probably a good chance if you retire in 2030 at 65 or 70, you might live another 10, 20, 30 years. Do you really want to be half
All
in
right,
bonds?
if you have a 2030 target date fund, how old are you? 58?
If you have
9 years?
Does nobody know how this works?
About that.
Well, 2030 is what? What?
It's
year
9
is
So
years.
it?
you're
What year
retiring
is
at
it?
67.
It's 9
67.
years from now, and you think you're retiring at what age?
Say
67?
Yeah.
Say 67?
Was
All right.
that what people would target a target date to?
Why is
to?
67? I don't even know what the age is. I guess it
Wouldn't they
depends.
probably do it like 59 and a half or whatever when they're...
Required minimum distribution. I
Right
would do
now,
70.
you would be 59.
You would be 59. So you're saying, does it make sense to be 59 years old and half bonds? 100% it does not.
Yeah.
Is that what the target date funds currently look like?
Yeah. Take
Why-
a look at them.
They don't change that glide path based on like expected returns?
Well, the whole idea.
I thought Vanguard did lean more into equities a few years ago.
Some of them do, but they're not going to get penalized for being too conservative, right?
Okay, now you're saying 80-20 is the new 60-40. I 100% agree with you. The thing is, though, you have to dance around that when you're like explaining to people that are expecting a 60-40. Not dance around like not tell the truth, but you have to put a lot of emphasis on you just have no choice other than to accept more volatility. Like there's no choice. I'm sorry. Like I can't pretend this isn't going to be more volatile. It definitely is. But what is your alternative? There really isn't one right now.
Well, explaining that you lose money in bonds in rising rate environments.
You
Nobody's
lose money right now.
Yeah, exactly.
In a 10-year bond,
Yeah.
unless you think the rate of the cost of the things that you buy is only rising by 1%, it's a guaranteed loser.
Yeah.
You're doing it for a reason beyond just the income. You're doing it for stability of the portfolio, but half?
I think one of the best things to do, and I know we're talking about oldies. We'll get back to youngies in a second.
I'm like, I don't talk about target date funds.
You definitely don't. You don't need to.
But if you're sitting down with a couple that's retired in their 70s and you say, how you feeling? Good. What are you doing? I'm traveling. Do you think you'll live another 10 years? Yeah. Do you think you'll live another 20 years? Yeah. My mother lived till 95. Great. Think of yourself as having 20 years to invest. Are you really going to put that much money in bonds? Okay.
You can't unless you continue to make money from some other source. I 100% agree with you.
Well, the 2065 Vanguard is 90% stocks. So that's like for somebody like me.
Yeah.
That's appropriate.
Yeah, that's right.
That's ambitious. No, I'm just kidding. Rooting for you.
It's funny though. There is still like this conversation still happens even with millennials saying like, oh, people ask me, what percentage should I have in bonds? I'm like, well, I'm 100%
Negative
in
30.
equities.
Yeah.
Equities and real estate. I don't really know why someone in their 20s or 30s would need exposure to bonds.
Well, the robos build bond allocations in. Some would say they're earning a little bit of extra income there for themselves.
Yeah, that's why people
But-
will show me their allocation given to them by doing a robo questionnaire, and it says they're like 35% in bonds. I'm like, you're 29-year-old female with a 6-figure job in New York City. What?
My robo account
How
is
does that make
90% stocks. My biggest risk in all aspects of life is already the stock market, and I'm still going 90-10.
Yeah.
Like the stock market affects literally everything about my life, right? But like for my own, so I have money on our Liftoff platform, which is powered by Betterment. But I'm in the 90-10 allocation at 44. I have no intention of using that money in the near term.
No.
If I change my mind, then I have to change that allocation.
Yeah.
Yeah.
Like if I'm like I might buy a house, that's a different story. But I'm not.
Yeah. I've told many young people that when they show me their allocation from a robo that I think that it's much too conservative for their age and their stage of their career and everything.
All right, let's keep going. This Gensler's vision thing. Gary Gensler is not going to be a hands-off Securities and Exchange Commission chief. He's like looking at some of the things that have been in plain sight for years and kind of just like everyone was like, yeah, isn't that crazy? And he seems to want to really do something about it.
I can't believe that they're still going after the payment for order flow thing.
They might not be. They might just be saying like we're looking at it, which is what that's their job.
What are the big things he should be working on? What do you think?
I think that they should be working on some guidance for investors for a Bitcoin ETF. I think that
I think that's top priority for the average citizen.
like so.
Oh, that's interesting. Like if you ask most investors, what would they say? They would say, just give us a safe way to do this.
Nate Garassi
Yeah.
tweeted recently. The first Bitcoin filing was in 2013. The first Bitcoin ETF filing.
Yeah, that's wild.
What was the price of Bitcoin in
Winklevoss.
2013? I mean, it was
500.
These poor guys have been pounding their head against the wall, lining up around the corner of the SEC. So lately, the guidance that Gensler's giving is futures-based 40 Act, right?
why? So that it would fall into the purview of the CFTC?
Correct. And 40 Act, because he likes the overview of having a board. You've got an independent board of trustees to oversee it.
It is a commodity. If we're saying it's digital gold
Yeah.
and that's the primary use case, and that's what people are trading it for, that's what people are buying it for, I don't hate that approach.
So some of these folks like Grayscale is going bonkers, like after they've been at this for so long, because they want to convert what they've already got on the marketplace over to ETFs, and that's not going to work in that structure.
What if it's
If it's a trust already?
Right. You can't convert what they've already got because they own the physical holdings into
physical
that.
physical LMAO?
Right. Yeah.
Not really physical though.
Yeah.
But they own the actual.
Right.
Right. They own the underlying.
Yeah.
It's
Yeah,
not.
pardon the physical.
Right.
I got too much GLD in me. Yeah.
Right. So do you think then that it's not such a slam dunk for Osprey and Grayscale to take these existing publicly traded trusts and just say, okay, there's approval, we're ETFs now? Because
So-
they seem to think they can do that.
First of all, if Gensler gives them this future-based strategy and grants approval and it hits the marketplace, it's the right thing for something to come out because it's got to be a give and take. And I think, like you said, people are asking for it. If it's future-based, it's going to coordinate okay. There's going to be some bumps and bruises along the way. And then the next thing...
Tom,
once
where
they're-
will the bumps and bruises in a futures-based Bitcoin ETF come from? The roll?
The roll.
So
What if that gets all funky?
the contracts are going to be really screwy.
Well, the problem is there's not that many contracts out
Correct.
there, right? So
and there's only 3 years of history of people
Yeah.
trading them in Chicago.
What are we trying to protect investors from? If we can have a triple levered crude short ETF, why can't we have a Bitcoin E ETF?
the horse is out of the barn, right? Like, what are you going to do?
I'll tell you. I'll give you the reason why. From their perspective. From their perspective, this is one of the most manipulated markets on the planet. It doesn't matter that it's decentralized. There are whales who have their way with the price,
So?
at least in the short term. Well, we know that's true of stocks also. I understand what you're saying. The manipulation is in plain sight. There's a coordinated social media campaign being led by some of the most prominent voices in crypto to, quote, pump the price to celebrate El Salvador. I mean, the manipulation is not, they're not even pretending to not
How is that
want
manipulation to say everyone should buy at Bitcoin?
How is that not?
They were saying,
okay,
they were saying everyone buy $30 worth of Bitcoin.
I get that it's not like a mastermind behind the scenes like a penny stock. I'm just saying the manipulation is problematic for a regulator who's supposedly there to protect investors to just be like, yeah, sure, make products based on it.
I hear that, but if they're trying to protect investors, then get rid of some of these 3-time levered ETFs.
If there were a Bitcoin ETF, would people be doing less stupid shit in their Robinhood and Coinbase accounts?
They'd still be doing it.
They'd still be doing it?
But they're doing it anyway.
Well, we know. I agree with that.
Let me throw it out there. What if there were crypto, whether it be Bitcoin, Ethereum, where they were just using virgin coins?
What does that mean?
Coins that came directly from the miner, and they could validate that they came directly from the miner, that they were never involved in trading anywhere else. It came directly from the miner, and then that could be in some type of ETF wrapper.
It's like when you go to Tiffany and you're like, I don't want any conflict diamonds. Yeah. I don't want any conflict coins.
I don't want
Fine, whatever. If that would get it done, just get it done already. It's enough already.
Didn't O'Leary tweet something about this and it sounded... Yeah. But isn't this the most bullshitty thing on the planet?
Well,
okay.
So...
I mean, if Kevin said it, I'm sure that he has the right intentions, but it feels to me that there's no such thing as ecologically friendly Bitcoin because the miners are all over the world doing whatever they want.
I was at the Coinbase conference. O'Leary was there. I'm on the board for U.S. Global. Frank Holmes, who is the chair, you know Frank, but he's also the CEO of Hive, which is a big crypto miner. And he's saying, hey, I think that people would pay up for virgin coins because they're clean.
Who gives a shit?
Well, we don't give a shit, but if maybe the regulatory authorities would say,
doesn't
hey,
this just sound like a meme?
Well, maybe that's part of the whole thing too, is like, this is not an ESG friendly thing for them to regulate, or they need to regulate it for it to become more ESG friendly, which is the way the whole investing space is going. So how do they do all that? I don't know.
I feel like I'm taking crazy pills. How many fraudulent companies are publicly traded?
Probably hundreds.
Yeah.
They all came public?
Yeah, but it's different than them.
Different process.
That's true, but it's different than them regulating a whole new type of
right. They're not
currency.
They're not funds. They're not.
Do you feel like younger people would buy crypto if they were cleansed?
I mean, either way, I'm going to buy Bitcoin.
They're blessed. They go. They put them on the altar.
I feel better about it.
Leanna will buy any coin. Leanna is only buying cleansed Bitcoin. Is that about how?
You heard it here
that's a pretty
first.
good description. Yeah.
We're gonna make sure that only the cleansed Bitcoins end up in your account. That whole thing sounds like bullshit to me. And if I hear an advisor talking about that to their client,
it's never gonna happen.
I'm gonna laugh.
Yeah.
So, all right. So, do we think? And I know people must ask you this all the time. Do we think we're even any closer to a Bitcoin ETF? And are you surprised that Clayton didn't just do it? He seems to have cared way less about a great many things. And now he works for a crypto company anyway.
Right. And now he's in.
Did Eric Peters hire him?
I don't know. Yeah.
Okay. I think so.
Yeah.
I think he's involved with like a Bitcoin issuer.
He's in line with the rest of them trying to make it happen. So with this futures-based application, 40 Act, a lot of people feel this is going to come between now and the end of the year.
Really?
Yep.
Okay. Is that in the price of Bitcoin, do you think?
Might be. I don't know.
Great answer. I have no idea.
No clue. Yeah.
Yeah.
Okay.
I mean, the whole El Salvador thing. I mean, you look at it, there are some people, oh, he's trying to pump it. On the other hand, you dig down into it and say, is there something there?
Yeah. When are we all moving to El Salvador?
What if that works?
Who's now like the head of the central bank in El Salvador? Is it Pomp? Like who? Is that someone on Twitter gets appointed to that position?
So first of all, I'm just taking the other side for a second. You got 6 million people. You got a poor country. They're making $4,000 a year, right?
Okay.
The government buys $21 billion in Bitcoin and says, if you buy this Chivo wallet, which sounds pretty cool,
money.
they'll give you $30.
I don't hate that.
Like and then all of a sudden you're educated. Like, when did we first learn about investing?
And
when we first bought
empowered.
something, right?
Yeah.
So,
But Tom, it sounds like the purpose of this is not for these people to become investors. They want the money to be used in the economy.
Well, they're saying, like, I think one of the biggest use cases for it there, and any country where there's a huge underbanked community, like 70% of Salvadorans being underbanked and unbanked completely, is the remittances from other countries sending money back. They're saying that accounts for 24% of El Salvador's gross
And they
domestic
pay
product.
very high fees on those
Huge.
remittances,
Huge.
right?
Yeah,
think-
so this is
Okay.
gonna, it enables people to bank worldwide, and they can have people send money back to them.
So that's
So
the
I
use
like
case.
That's
so I
even
like
here,
that
that's what,
because
like-
that's a use case that doesn't involve like price target predictions
Yeah.
and futures trading and leverage.
Right.
That's just regular people getting access
Panama's
to.
looking at it.
I
now.
mean,
Right.
I talk
Yeah.
about Tyrone Ross all the time.
Yeah,
He'll be in New York in October. You guys got to get him.
bro, he'll be in El Salvador, literally, like advising the president of that
Oh,
country.
for sure.
You wait and see.
So this, I mean, that's what he talks about in America, the unbanked community in America, for
Right.
families and people to be able to send money to each other. And obviously, this is a huge part of this country's actual GDP. So It makes sense.
You just hope though that the next headline in 2 months isn't El Salvadorans lose 80% of their Chivo
Yeah.
wallets because of gambling in Bitcoin versus whales in Japan. Or like you just hope that's not where that's going. I doubt it will.
If people
But
start using it, and it's a good use case, and Panama jumps in. I was with Jan Van Eck the other night, and his head crypto guy on a plane to El Salvador. He's going down there to check it out. You see if people are using it.
better him than you.
how many
Yeah.
of the ATMs, because you know how it says they have the Chivo ATMs around El Salvador now, how many of them do they actually, did you know?
I don't.
I
Wait,
read about it, but I didn't look it
How
up.
many people got the wallet?
No, they have. I don't know how many people have the wallet, but they said they have the Chivo Bitcoin ATMs all over El Salvador.
I
too,
saw
in the malls
McDonald's and stuff like all accepting Bitcoin in El Salvador.
Yeah.
There's probably like 2 McDonald's, but I
Yeah.
thought that was cool. There was some coordination done with businesses to like make this actually work.
Just the fees alone that are saved for families and people that are doing remittances around the world, and even here domestically, is amazing.
It's the World Bank reports it was over half $500 billion in 2019 of global remittances.
Yeah.
And the average
That is so much money.
But imagine the fees that these people are paying
average-
on that to get money around the
the
world.
average fee for a transaction over $200 is 7%. It's
Yeah.
massive.
and who's taking that money? Like Western
Union?
Yeah.
Right.
Yeah.
7%.
So
And it
there's a
happens
great
right here
opportunity.
domestically.
Yeah.
For people that don't have bank accounts, someone's in the south, someone's in the northeast, you got to send money to your
No,
aunt or whatever.
But like, so I get it. I'm for the use case, obviously, but it's hard for somebody. How does somebody get educated to get a wallet, get set up, send the money? Like, that's not easy.
Well,
is
I
it?
assume that's what they're kind of doing that.
Well, the
right?
good thing is they all communicate on their phones. Just like a lot of third
Yeah, they're
world
learning
countries.
on Twitter.
Yeah.
They're learning on Instagram the same way our kids are learning dances. They're learning like what is blockchain, what is Bitcoin, what do we
Have
do
you ever
with it?
sent somebody Bitcoin?
No,
Me either.
but like for what? Like almost like here's Bitcoin instead of dollars, or
Just
just
in general,
sending
just
somebody
Maybe.
Bitcoin.
Like I said, people
Has-
are doing that on Cash App and stuff, I would imagine.
Yeah, you can do that easily with Square.
I'm sure you can, but I've never done it.
Have you lent any crypto, like to get the income?
You're doing that shit, right?
No, I tried. I couldn't figure it out. I think I might have lost it.
Oh, that's kind of cool.
Yeah, I wouldn't say lending. I'm probably making donations somewhere without knowing it.
Yeah, I tried Uniswap, and
I'm putting things into MetaMask and then losing my password, and then I open a new MetaMask. That's what I have going on. I don't
It's
know.
like my mom and Facebook. She's got
Although-
5 Facebook.
wait,
Somebody's
accounts.
getting benefiting
no, I
from
was
this.
just talking to Dylan about this. Every time I log into my MetaMask on a different computer, it tells me I have an invalid password. And every time I change my password, I write it down on my phone. So I'm like, I know this isn't the right password. So Dylan just sent me an article. You have to there's something funky going on. You have to type your password like literally like this. If you type it too fast, it doesn't read it. I'm like, this is supposed to be the future, and I have to peck
Yeah.
on the keyboard.
Yeah, don't you feel empowered by crypto? So what I'm basically doing is helping to burn more ETH.
The on-ramp.
I'm like part of the
You're a
solution.
giver. You're just a good giver.
I'm shrinking the amount of ETH available by f***ing losing mine.
The ramps are so
So,
frustrating
I'm
and
really trying to
inexpensive.
do my part.
It does not lend itself to mass adoption today.
Yeah, it doesn't feel like the future just yet. What's the thing about sports cards? Are you a card guy?
So
I figured you would be an NFT guy.
No, well, I was just going to give a shout out to collectible cards. Look, you do the Masterworks thing, right?
Yeah.
You guys both do
Yeah.
that. So you get a piece of something, which is nice. Did you ever collect cards?
Dude, I got something to say about collectible, but you go first.
Yeah. Well, so first of all, growing up for me, it was really cool to have them. And then my best friend from home actually moved out to California when I moved out, and we were roommates. We went back, got our cards, we started buying them again. Well, that was right at the top in late 80s, early 90s.
I was going to say that was like the 20s.
Which cards?
Yeah, Babe Ruth.
Which cards do you have? Like Mickey Mantle, or was that before? You,
Well, I do have Mickey Mantles. I've actually got
No, he was like Cal Ripken, right? Like that
I'm
era.
old. I like-
86
you're not
Mets.
Mickey Mantle old. That's like my dad. My dad has Mickey Mantle
Yeah.
cards.
Mantle.
No, I've got it.
Ken Griffey
So
Jr.
now I brought it back in the
He's not
last
that
couple
young.
of years.
What cards do you have?
I've got Mickey Mantle rookie. I've got, I've got Jackie Robinson rookies. I've been buying up more good stuff lately, right? And my son kind of catalogs it for me, so it's something we can kind of do together.
Okay.
And I feel like, yeah, they're going to go up and down. They've gone up in a big way, and I feel like, did you guys ever buy cards? Did you guys
Yes.
ever buy cards?
Tons.
I was
Yeah.
I was comic books.
Yeah.
My brother was sports
I had a
cards.
ton of cards.
Yeah.
I was Spice Girls stickers
Spice
from
Girls
stickers.
bubblegum.
Yeah.
What are you saying about collectible? Are you talking about the collectible, the app, the sports company, or no?
No, I use that. I buy them on eBay, all that stuff.
So people are going mental right now.
Yeah.
I bought on collectible a Wilt Chamberlain. I think it was his high school uniform, or maybe it was the 76ers. I can't remember. But I bought this in March. 6 months later, or however many months later it is, shareholders were offered a buyout,
Right.
a 50-something% premium from what we paid for it 4 months ago. And I, of course, was like, hell yeah, that's awesome. 50% in 4, 5, 6 months, whatever it is. Let's go.
Why wouldn't you buy it yourself and own it? Like buy cards yourself.
Because
and
this thing
hold
is
them.
like $1.5 million.
Oh, right, understand. But
Yeah.
like-
Why aren't you
like-
buying $1 million baseball
But,
cards?
hold on,
yeah.
but Tom, listen to this. 82% of shareholders voted no.
So they wanted to hold it.
Said this buyout offer is not good enough. Not good enough. 50% in 5 months?
It's like Rally Road. That's happening all the time for handbags and
Are they still around? 'Cause
Oh
I
yeah,
know
yeah.
they're
yeah.
Oh, yeah.
Cars and
So
stuff
I was
like
in
that.
I was in the 18%.
Rally doesn't let the holders decide when to sell the car. Rally is actively managing the portfolio. They sell.
No. So eventually, if they sell something and an offer comes in, they'll go out to the holders.
Oh, I thought it was the other way around. I thought they just say this is what's in the holder's best interest.
The
and
way
they will
I
make
the way
sale.
I understand
Okay.
it, yeah.
Yeah, Josh, I have firsthand experience. I was telling Michael about the other day.
What do you own at Rally?
I had a Ford GT40. I had some shares of it, and
So you have a say in when they sell it.
people voted to sell it for something like a 10 or 15% gain. I was very mad.
What is the
It's like my
point?
favorite car. I wanted to hold it
They
forever.
are so cool.
Hey, so
I love
guys, I know we
Masterworks,
want to
yeah.
move on, but a couple things. I brought a couple things. I got Patrick Ewing rookie for you, baby.
Oh my God.
More gifts.
Oh my
Okay.
God.
Wait, is that real?
Dude.
That's real.
Why are you the best human
Okay.
being on
And-
earth?
Do you have a Patrick Ewing rookie for me?
So I want to say something. I love when you go deep and personal. When you talk about your mom, you talk about your kids, and so I hate the Lakers. I'm a Celtics fan, and I moved to LA. But how couldn't you love Kobe?
Right,
and
I
when
did.
you talked about
Yeah.
naming your son Kobe, I thought it was the greatest thing. And I've let you know a couple times when I love how you go
Are you
deep.
trying to make me cry? What are you doing here?
Oh my God.
Oh, Tom.
Tom, you're
Shut
getting
up.
invited back for sure.
Dude, are you kidding me?
Let me see this.
I love you.
Okay.
I really do love you.
This is incredible.
So listen, Leanna, I'll tell you, you are so dynamic, and I watch your stuff, and it's fantastic. But I didn't want to say, "Hey, here's a sports card." I picked something.
You brought a Spice Girls
I
card?
it wasn't a Spice Girl. I don't. But one of my favorite people, as far as actresses, is Kristen Wiig. She's so friggin' funny, and I loved her in Bridesmaids. And I thought you'd like her because she's really cheap. Like she picked that cheap restaurant where they got food poisoning. Remember that?
Yes.
And also that made Melissa McCarthy take the dump in the sink. Remember?
Yes.
So
This is going to an interesting place.
I got you a signed
With that
$1
said-
bill from Kristen Wiig.
Oh my! Did she
Tom,
actually
shit.
sign this?
Yeah.
Are you serious?
Uh-huh.
This is so cool, Tom.
Tom, you're an angel.
So part of this is
She's a hustler.
like
Oh my God.
we've talked
That's-
about we
that's
talked about
sick.
crypto
That's really cool.
and you talk about NFTs, okay? But these are things that you can hold.
Real world.
Real world.
Yeah.
Real world.
You can share with your family. You can share with your kids. And I'm just doing a kind of a shout out to a little bit old
Dude,
school.
wait till you see the gifts that are sitting
my
waiting for you
gosh.
for your next appearance here.
Yeah,
I feel,
right.
I know.
I feel so, first of all, grateful.
Aw, you're
This is
so awesome.
Unreal.
This is
Thank
like
you.
unbelievable. This is epic because we're huge Knicks fans, and I love it. Thank you so much.
Tom,
Thank you.
It's great.
I met Patrick Ewing at the airport. I don't remember this. My parents told me. I was like 5 years old, and I was crying. And he said, "What's the matter, Mike?"
No,
Yeah.
Really.
well, your parents were like,
Yeah.
his name is Michael, and he loves you.
Yeah.
Aw.
Dude, that Cope. Let me see that Kobe card.
Tom,
All right, so let me ask you a question. So this is not going away. The cards, the NFTs based on cards. Is it just getting started, or is it in the middle? Like where do you think
But
this is?
it's good no matter what. You're getting people investing, right? And some people are going to get absolutely screwed. We know that, right?
Yeah, but that would happen whether they were
no matter
trading
what,
online or
auctions
trading in
or-
real life.
You know,
yeah.
it was savings and loan stocks when I was little. So it was those types of things where that's where you learn. And there's nothing better than getting a good pop in the nose. You learn from that. And hopefully you learn that at an early age. And
Why won't they approve a baseball card ETF? Like what is the big holdup here?
Gensler's such a hater.
Dude, you're the man.
This is the best episode ever.
This is the best episode. you win. Who's on next week? Let's see if they want to top this.